Hey traders, welcome back to the weekly Forex Forecast. Last week was a very busy week for US data, and the big pieces of data were FOMC QRA on the Wednesday, and then non-farm payrolls and ISM coming out on the Friday. And we also had last week 2 Bank of Japan interventions by the looks of it. So coming into this week, the most important thing to note from the dollar data last week was we had FOMC, and the FOMC was fairly dovish. Powell came out and stated that the next move in rates is likely to be a cut, not a hike, and that a softer labor market would be the sign that they are getting close to cutting rates. Then we had, with the backdrop of that coming into Friday, non-farm payrolls data coming out. Non-farm payrolls came in soft, and also the unemployment rate ticked higher, showing that this increase in interest rates is squeezing the US economy. We're getting a slowdown, and because of the soft jobs data on Friday, we saw quite a sharp sell-off in the dollar below the prior high over here, this breakout area, and we also traded into the lower bound. However, what followed that was ISM data, and the ISM data came out below 50, so it's telling us that the services sector in the US, now alongside manufacturing as well, which also came out as below 50 last time, is in contraction. So we've got a contraction taking place in the services sector in the US and in the manufacturing sector. And this is why we saw the sell-off initially in the dollar, because this feeds into the weaker labor market. So we're heading towards, although we're not quite there yet, a recession in the US and globally. But the kicker was, which reversed the dollar from the lows, was the ISM services that came out with the prices paid going in the opposite direction. So yes, we're seeing a slowdown in the services sector, but the price is being paid, in other words, a proxy for inflation within the ISM report, in both manufacturing and also the services on Friday came out hotter than expected. So what we're looking at here is stagflation. We're looking at risk off, but inflationary. And when you have stagflation, this is not only negative for stocks, but it is bullish for the dollar in the sense that, yes, we are seeing a slowdown, but the Fed are likely going to have to hold rates higher for longer anyway, because inflation has not subsided. So coming into this week, we do have this kind of set up in the dollar where it's sitting at the prior high, but does it rally? Does it reverse higher, or does it fail and start to break lower? It's hard to say, but with the stagflationary print on Friday, on balance, I do still favor dollar longs, because don't forget it's relative. And dollar long plays are one of the things we're going to be looking at this week. And I still think on balance, as it currently stands, we are looking at maybe a slightly longer correction in the dollar here, but a run up to the 107.35 within the next few weeks. Going into this week, however, dollar long plays are not my favorite theme. My favorite theme this week is Canadian dollar shorts, and we're going to be looking at those more in today's video. Okay, so if we look at the scores for the coming week, you can see that the Aussie is still the #1 long idea. And going into this week, Aussie long plays are one of the top things I'm going to be looking at. Just keep in mind, we do have an RBA interest rate decision on Tuesday, so I'm going to be looking for Australian dollar setups after the interest rate decision on Tuesday. After that, looking at this purely on a performance basis, I am interested in dollar longs still, because again, even if the dollar is selling off a bit, relatively speaking, you could see a number of currencies coming down. As long as the dollar comes down slower than the other currencies, you will get dollar pairs outperforming. So I still like US dollar long setups as it currently stands, and I also like euro long setups going into next week as well. To the short side, the Japanese yen is something we can look at in today's video. We did get a double intervention last week, and it seems unlikely, especially as the near-term momentum in the dollar has been broken somewhat, kind of bullish to neutral as it currently stands. It does seem unlikely we're going to get more intervention next week. It's possible, but it seems unlikely after the big moves we saw last week. On top of that, to the short side, we do have the Swiss franc, and if you look at these, a number of these markets are actually sort of neutral. Really only the Australian dollar to the upside and the Japanese yen to the downside are the outperformers. Everything else is kind of neutral, kind of choppy. So going into next week, the Swiss franc to the downside, although this is currently -8 with a downtrend arrow, I do want to filter Swiss franc shorts out this week, and I'll tell you why. Because at the end of last week, we did get hotter than expected inflation coming out of Switzerland, and on balance going into next week, I just think there are better shorts because of that. And the one that I do really like is the Canadian dollar shorts. We do have quite a strong sell-off in crude oil. I would also be interested in shorting crude oil given the opportunity itself. And I think crude oil shorts and crude oil derivative shorts heading into next week are going to be one of the best things and one of the top themes I'm going to be focused on. So alongside Japanese yen and Canadian dollar shorts, we're also going to be looking at pound shorts. So going to be looking at Aussie yen, US dollar yen, and also Euro yen to the upside. Going to be looking at Aussie CAD, US dollar CAD to the upside, and EurCad to the upside. And after that, we're also going to be looking at Euro pound to the upside, pound dollar to the downside, and pound Aussie to the downside next week. Okay, so kicking off the watch list with crude oil, as we always do, I do actually like this market for shorts. We cover crude oil every week, but this week I do actually like this as one of the best plays. And again, if crude oil is going to sell off or we're going to get a weaker crude oil, and don't forget, I'm talking about two things here. We could either pull back, break lower, or pull back and reverse around the 80.95. So those are the two setups, break out to the downside or fading it for 1 or 2 days above its upper bound at the 80.95. Either way, I can either be short or do nothing. I can't buy this asset next week. And I do also like, as I said, crude oil derivative shorts. So that could be the Canadian dollar, in the Forex complex as a short. Or you could, for those of you who trade stocks, XLE stocks, energy stocks, which are derivatives of crude oil as well. So I do like crude oil and crude oil derivative shorts heading into next week. Any pullback in this market next week is viewed as an opportunity to look first and foremost for a breakout down to, and very often you get, within 1 week, you'll get one breakout, a pullback, and a flag down to the 75.62. This is where I'd be looking to book profits on any short-term breakout trade intra-week. And if we hold, so we start to pull back, and most markets will pull back a little bit in a given week because they paint, if you've got a weekly candle, they'll paint the upper wick even if they're going to reverse for the rest of the week. But I'll be looking for the pullback, and if the pullback holds and we breach the 80.95, the prior low here is a great place to start to look for a 1 or 2 day reversal to the downside in crude oil. Okay, so kicking off the Forex universe with the Aussie pairs, don't forget we do have the RBA on Tuesday morning, so going to be looking for these setups post RBA on Tuesday. What I'd like to see is we've got really strong momentum to the upside. I'd like to see this market pull back, consolidate, and then I'm going to be looking for one of two things. I still can either buy this market or do nothing next week. I cannot short this. So any kind of consolidation Tuesday and a breakout with strength on the interest rate decision, I'm going to reactively be looking for a pullback and then a follow through you can look at into the 0.91218. And if we do the opposite, we just consolidate and then we sell off, and we breach the 0.89718, and with the interest rate decisions, you might breach this quite deeply. You might pull back and test this. You may even sell off hard all the way into this low. But I'll be looking for post RBA, if we breach the 0.89718, I'm going to be looking for the market to start to slow, and then I'm going to be looking for a 1 or 2 day reversal to the upside in this market. Next is Aussie yen. Now, despite the double intervention, you can see here and here that after we got these double interventions, you see we started to move lower, but we have not actually reversed this market. And yes, if the dollar weakens a bit, we may push down a bit lower. However, as it currently stands, it seems unlikely for next week we're going to get another intervention. So it does look like we can clear the way next week for opportunities in Aussie yen. What I'd like to see is any kind of continued pullback in this market. Don't forget we've got the RBA. So I'd be looking for a breakout to the upside post RBA, and then a pullback, and then a move into the 102.63. Or alternatively, if we sell off and we breach the 99.68, so we have the RBA come out on Tuesday, we get weakness in the Aussie for whatever reason, and we breach this level. You can see there are some nice key areas of resistance here. If we trade into this level, I would be looking for the market to slow, and then for 1 or 2 days reversal to the upside in this market. I wouldn't really want to hold this over the weekend. I'd like to be in and out, for a day or two in the yen pairs, just in case, there is an additional intervention. But it seems unlikely now next week with this double intervention last week. And the final Aussie pair we're going to look at is pound Aussie. Now, I want to be short or do nothing in this market next week. I can't buy this. Just bear in mind, on Thursday, we've got the Bank of England interest rate decision. Now, coming out on Thursday, here's the thing. With the UK, out of all of the major currencies, it is the UK that might actually blink first and end up cutting rates first. I do think on balance, leading into the interest rate decision on Thursday, we could end up with a dovish outcome. Even if they don't cut, you know, I do think that on balance, it's unlikely we're going to see anything super hawkish out of the Bank of England. If anything, they're also going to tilt dovish. So with that in mind, what I'd like to see is any pullback on Tuesday or leading into Tuesday, and any strength in the Aussie, which would push pound Aussie to the downside. So as the Aussie rallies, pound Aussie sells off. Going to be looking for a potential pullback and a sell-off into the 1.8816. Ideally, if you could be in and out of this before the interest rate decision on Thursday from the Bank of England, that would be great. But if you are looking to hold through something on balance, it does look like we're going to get a dovish outcome on Thursday. Just bear in mind, if you hold through interest rate decisions, you are taking that risk because you can get, you know, unpredictable moves from interest rate decisions. So the second thing I'll be looking for next week is if we pull back and we don't break out and for whatever reason we get Aussie dollar weakness, so the Aussie dollar sells off, even if it's just a bit and we breach the 1.9147 roughly, I'm going to be looking in this area for the market to start stalling out on lower time frames, and then you can look for a 1 or 2 day reversal to the downside in pound Aussie. Moving on to the dollar pairs, starting with euro dollar. Now, I look at euro dollar every week, very much like crude oil. We just assess it every week. However, going into next week, I don't think this is a fantastic market because both the euro and the US dollar are currencies that I'm looking to be long. On balance, I do favor short, so I wouldn't want to trade this intra-week, but what I'll be looking for next week is any continued push higher in this market above the 1.0854. This would be an opportunity, especially if we start to test these highs. This would be an opportunity to look for a 1 or 2 day reversal in this market next week. You may well find that neither the upper or lower bound are actually tested next week. Why? Because two strong currencies, very often this can just kind of chop and go nowhere. So I would not be surprised to see this do nothing next week, but if we do breach the 1.0854, I would be potentially interested in a range trade. In other words, we've breached the upper bound, so now we have roughly only a 30% chance of continuing this asset to the upside into the end of the week. And on top of that, not only are the odds favoring a kind of reversal, but we have a neutral asset, so you can kind of range trade it from the upper and lower bounds. But intra-week trading this might be difficult next week. You may just chop around. Moving on to US dollar CAD. Now, US dollar CAD is probably my favorite dollar play. And again, that CAD short theme, crude oil short theme, is really one of my primary themes next week. I do think CAD shorts and crude oil shorts are probably going to be one of the best setups. Whether they pull back, test the upper bounds, and they're to be faded, or whether they just break lower, I do think they are going to be the best setups next week. So any continued pullback in this market next week is viewed as an opportunity to look for an intra-week breakout. And we do have this kind of big A, B, C, and we started to bounce. But any pullback, I'm going to be looking for an intra-week breakout, a pullback, and you can look for that bull flag setup into the prior high and the 1.3781. Alternatively, if we continue to come lower and we breach the 1.35912, this is an area I will be looking. Maybe we push through and test this low. I do like it when we breach these levels and then we test, you know, kind of 4-hour support down here, or daily support, even better. But we test these lows. This is going to be an area I'm going to be looking for momentum to fade and look for a 1 or 2 day reversal back inside this range next week. Next is US dollar yen. Now, we had the big intervention. Of course, this market has sold off quite a lot. And you may be thinking, well, why would you want to get involved with this to the long side with that intervention? Well, the thing is that we have already had 2 interventions, and, you know, markets don't move in a straight line. There is a decent chance that this actually pulls back, especially tests the 155 next week. So I'd be looking for one of 2 things. I would be looking for this market to continue to consolidate and then break out to the upside. And I'm really only talking about a short-term move, you know, for 1 or 2 days into the upper bound at the 155.07. And that would be where I'd be looking to book profits. I wouldn't hold on to any longs in this long term. The second setup I'll be looking at next week, especially if we fail to break out and we start to pull back and we test these lows over here, this low or even this low. So we breach the 150.91. I would be looking in this area for potential 1 or 2 days reversal. Again, we're selling off hard, we pull back, we reverse, and then we'll probably start to continue lower if the yen is going to actually bottom and continue higher. So I'm really talking about short-term moves to the upside here next week. 1 or 2 days is what I'm trying to capture. And the final dollar pair is pound dollar. Now, what I'd like to see is we did sell off quite hard last week above the upper bound. We breached it on non-farm payrolls and then we reversed. If we start to break lower this week, I would be looking for a breakdown and a pullback and a sell-off into the lower bound at the 1.24247. The only issue is next week we do have that Bank of England interest rate decision on Thursday. So when you have interest rate decisions in currencies, they tend to hold and be choppy leading into those interest rate decisions. So the better setup next week would be if we are breaching the 1.2668 and then reversing before the interest rate decision. So maybe we push higher, let's say on Tuesday, and we start to reverse Wednesday, Thursday. You know, we hold the range leading into Thursday. Or the second thing would be if we pop higher after the Bank of England interest rate decision, again, looking to fade this above the 1.2668. Wrapping up the Forex universe with the Euro pairs before we move on to gold and silver, starting of course with EurCad, because I really do like these CAD shorts next week. What I'm going to be looking for is I'm going to be looking for a consolidation or a pullback, and any breakout in this market, looking for a pullback and a follow through into the upper bound at the 1.48219. Or alternatively, if we start to sell off all week, we come back, we test this low and we breach the 1.4638, it's going to be a great place to start to look for a 1 or 2 day reversal to the upside in EurCad. I can either buy this or do nothing next week. I cannot short this asset next week. Next is Euro Yen. Heavy selling pressure again here after the interventions. And going into next week, I do think we're due a bounce. Now, if we start to break out intra-week, I would be looking for a breakout, a pullback, and a retest of the 16690. And last week, actually, we came down, tested the third lower bound, and that's one of the reasons why I think we're set for a snapback. Now, if we do that, again, looking only for 1 or 2 days up, I wouldn't look at holding this long term. We may get future interventions, and we may continue lower overall. This may be an overall peak in Euro Yen because of the interventions and the softer dollar. However, if we fail to break out to the upside and we continue down, this is going to extend this sell-off even more. And if we breach the 162.50 and test this low, and on balance, actually, I think this would be the better setup, I would be looking for a 1 or 2 day bounce to the upside in Euro Yen next week. And the final Euro pair is Euro Pound. Now we started to break out and we do have some nice momentum. So what I'd be looking for is a pullback. And because the Bank of England is on Thursday, the good thing about that is very often you can get moves in the pound pairs before Thursday. I mean, it's coming towards the end of the week. So I would be looking for any pullback and potential breakout in this market into the 0.86242. Or alternatively, if we pull all the way back and perhaps we consolidate and then sell off in the Bank of England meeting, the 0.85338 and these lows below here. And if we get a really strong sell-off, maybe we test this low. But I would be looking for momentum to slow, maybe some double bottoms on lower time frames, and look for 1 or 2 day reversal to the upside in this market next week. Okay, so wrapping up the video with gold and silver, and I want to use gold and silver reactively next week. Why? Because at the beginning of the video, we discussed how the US dollar is sort of in a bullish, relatively speaking, but bullish to neutral situation where we breached the prior high, we pulled back, we've tested it, and we're just kind of sitting here. And although I think that this is likely to rally on balance, we may actually come down a bit lower first. So I'm taking a bullish to neutral, but you could say overall a kind of neutral view on the dollar when it comes to gold and silver. So what I want to do is I want to trade these reactively. And what I want to do is, if we get gold and silver pulling back into their lower bounds, I want to be a buyer of gold. In other words, on dollar weakness. And if we get dollar strength, I would be looking to be a seller of silver on balance and fading that from the upper bound. So buying gold from the lower bound or selling silver from the upper bound next week. That's how I'd like to play gold and silver, personally speaking. So coming into next week, any continued pullback, and we may get the breakout intra-week, in gold and pushes into its upper bound, but I'd be using that as the opportunity to short silver. But if we pull back, and especially if we breach the 2233.18 and test this high, this would be a great place next week to start to look for a fading double bottom on the lower time frames and a 1 or 2 day reversal to the upside in gold. So I can either buy gold next week or do nothing. I'm not going to be shorting gold next week. Wrapping up the video with silver. Now, we are kind of trending to the upside still, and if we start to pull back, we may see the breakout intra-week. I would prefer, of course, to buy gold if that was the case, and you may see both gold and silver rally into the 28, in this case 32. If that's the case, and we do get this kind of strengthening of silver into the upper bound, I would consider, although it's not my favorite setup, we cover gold and silver every week, I would consider looking for a 1 or 2 day reversal to the downside in silver. On balance, I would prefer to buy gold than to short silver next week. And don't forget, both gold and silver can go up at the same time as the dollar is going up against other currencies. And generally speaking, the CAD shorts and crude oil short and any crude oil derivatives, I think is going to be one of the best themes to look at heading into next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com.